everyone, welcome to this personal finance special after the budget, and now it's time to get your financial portfolio right. Looking at the kind of announcements, especially the new tax regime, taxpayers, what all is there for your portfolio? What are the changes that you need to do, or is there any change that one really needs to, go ahead with as far as their financial planning is concerned? So let's deep dive into all of this, and let me introduce you to our star panel for the day. I have with me Feroze Azeez, Deputy CEO, Anand Rathiwell, Tarun, Director, Deloitte, and I have Anthony Heredia, MD CEO, Mahindra Manulife Investment Management and Amphi VC. Thank you so much for joining in, and good evening and welcome to the show. And let me just start with a major tax slab revision as per the new tax regime. And Tarun, this question goes to you because I don't want to take away all the information analysis from you, but could you just elaborate on the revision in terms of tax slabs which were already expected? In fact, a lot of more things were expected as far as the new tax regime is concerned. But having said that, since the time the new tax regime has been introduced, we've seen a host of changes, just to make it investor friendly, taxpayer friendly. So what according to you has changed, and the change that we're talking about, how beneficial is it, Tarun?
No, so Kavita, as kind of the finance minister always talk about, she keeps that pretty interesting and the impact for the last. And that's why she started with the direct tax proposal right at the end. So in the new tax regime, what we saw, and as expected also, the changes have come, and in the sense that the slab rates have been rejigged. So earlier, any income up to 3 lakh was tax exempt. So that has been continued in the budget proposals for 24-25. And then what she has done is has slightly tweaked the 5% tax bracket. So earlier it was 3 lakh to 6 lakh, it was 5%. So now that has been changed from to basically 3 lakhs to 7 lakhs. And then accordingly, the next slab, like currently it stands at 6 lakh to 9 lakh of an income, that attracts 10% tax. That has been changed to 7 lakh to 10 lakh. Now that will attract a 10% tax rate. Then that 15% slab, earlier, basically it stands at, say, basic 9 to 12 lakhs. That has been changed to 10 lakh to 12 lakh. And then the next slab is basically 12 lakh to 15 lakh, which is 20%. So that has been kept same in the current budget proposals for 24-25, which is again say basically 10 lakh to 12 lakh it is, or 12 to 15 lakh it is 20%, and then above 15 it is 30%. That has been kept same. So in net what we see is there is a 10,000 tax benefit when we compare from a tax slab change perspective. So 5,000 in the first slab, which is basically 3 lakh to 7 lakh now. And then in the next slab also, which is 7 to 10 lakh, another 5,000. Now, what the finance minister has also done is she has increased the standard tax deduction from basically 50,000 to 75,000. So another 25,000 limit has been enhanced. So if we multiply it by 30%, so it gives a tax saving of 7,500. So in net 17,500 is the tax benefit that she's kind of calculating without taking into account the cess, so the cess. And if we add that cess of 4%, it comes out to be 18,200. So broadly, this is the overall tax slab rejigs in the new tax regime that has happened. And as expected in the old tax regime, there has been no change. So the slabs which was there earlier, it basically stands as is. Yeah, covered.
All right. So, Tarun, in a nutshell, we can say that, you are definitely getting more income in your hand, but also does it mean that it's time for you to shift to the new tax regime in case you've been just thinking about it? Is that also a takeaway that we can draw, Tarun?
So, Kavita, well, that's a very interesting question. And in fact, when this is one of the topic that the finance minister touched in her speech as well. So when asked about how many onboardings have happened, so last time we saw nearly closely say 60% onboarding. And with that in line, she said that around two-thirds of the taxpayers already are preferring to the new tax regime. So that's how the change or the shift is happening. Now, coming to your question that should, given these tax stops in the new tax regime? Should the investor, individual taxpayer, decide and move to the new tax regime? So answer is, well, yes, but it also depends upon what all benefits you are kind of currently claiming in the old tax regime, say in terms of HRA, say in terms of housing loan, or say ATC, Chapter 6A deductions and all, ATD deduction. So broadly, earlier the inflection point at an income of say 15 lakh or greater than 15 lakh used to be Kavita, say 3 lakh 75,000. So if you are having overall investment deductions of 3 lakh 75,000 or more, then people used to prefer an old tax regime, or old tax regime would have given a better or a tax saving. But now that inflection point, because of certain relaxations in the new tax regime, has gone up. It is now becoming close to say 3 lakh, 4 lakh 38, 33,000. So closer to that. So which means that obviously individual will have to now decide and maintain that kind of an investments deductions if he wants to prefer and still go with the old tax regime. But yes, now the things are pretty much clear from the finance minister that a new tax regime is the future, and that's how she's promoting there.
Absolutely. So now, as per the new tax regime, Feroze, we have income in your hand, especially if you are someone who's enrolled as per the new tax regime. But then I also want to understand from you: will you be calling the decision on LTCG and short-term capital gains tax as one of the showstopper announcement? The question is also coming from a point of view where we have more income in hand as per the new tax regime and as per the new tax regime taxpayer. But you're also looking at consumption. We're also looking at raising household expenses. We're also looking at people getting in more into equity and capital markets. How would you call, or how would you rationalize this particular decision or announcement?
Firstly, yes, Kavita, I think it is a decision which is prudent, and I think it's still not taken so badly, at least today, by the markets, because taxation for all the assets has been tampered around with. Right. So if household saving is about 800 lakh crores in India, that's all assets are going to fight for the same pool. So if you look at the real estate taxation getting a detriment, and there is LRS taxation becoming better, international funds taxation becoming better, mutual fund taxation net becoming better, except the long term category, because most people don't use a mutual fund for less than 1 year, and that 20%. So to answer your pointed question, I would say that the change in capital gain tax in the long term category is the minimum envisaged. Along with that, the relative disattractiveness of taxation for other assets, especially the physical asset real estate, has not put capital gains or equity in the back foot. That's point one. Point two, I think the new tax regime which you were discussing, has only a 9.2% tax, even if you have a 15 lakh salary. Okay, 9.2% tax for 7 times more than the per capita income of the country is the least it can get, right? So that's the motivation to get into simplistic, no deduction, new method, and pay 19% tax if you have a 20 lakh salary. If you have a 15 lakh salary, you will be paying 9.2% tax, approximately, give or take, is a very, very attractive tax rate. And I think the new workforce is the one which is choosing the new tax regime, because they don't have any commitments of insurance policies taken in the lieu of deductions for long periods of time. So I think more money in the hands, more money in the equity markets is possible. Of course, at the face of it, capital gain tax increase seems very detrimental, but relatively, equity has not been hampered so much because real estate taxation has taken a beating. Only that fair market valuation clarification, which we were waiting for, I'm sure Tarun can throw some light on it, because 2001 fair market valuation, if that rule remains, historical properties will still have some saving grace. If that's gone too, then I think this taxation of indexation is reasonably retrospective beyond the century as well.
So, Anthony, as Feroze also explained, and going forward with this answer of his only, looking at the way we are seeing the new workforce entering and getting into the capital markets, but they are also experimenting and dabbling in other financial instruments also. Not this kind of a taxation and rationalizing it across asset classes. What kind of an investment or investor environment we are in right now? And it's not only short term, these kind of changes are going to impact long-term investors also, where obviously, earning from your investments and profit is the main focus for your financial portfolio as well. But then investor trends are also changing. How do you think these particular decisions are taken as per the current market movement or current investor sentiments or trends according to you?
So, Kavita, I personally don't think that tax ever should become the focal point of an investment decision. And to that extent, I think the reaction of the market pulling back from the earlier lows uh, probably understands the fact that you focus on the capital gain possibility and then you focus on the tax and not the other way around, right? So I think fundamentally speaking, given what this budget has done in terms of ingredients for potential capital gain over a long period of time, I think people are more calm by that and probably adjust to the fact that they pay 12.5% versus 10% that they were paying earlier. That's point number one. Point number two, for a lot of first time investors or investors who have started investing in capital market products, I would say over the last 2 or 3 years, I would think that they will probably worry about the tax that they have to pay, or they should worry about the tax that they have to pay 5 or 6 years later, right? Because the only way at these current market valuations that you should be looking at investing is having that kind of time frame in mind. So while it does in the short term seem a bit of a damper, I think if you look at the broader context, it's kind of investor education for free, right? The fact that you don't focus on things like tax, etc. You focus on what the argument for the investment product is. The other point I'd make is that, and Feroze alluded to it, I think there have been some positives for the fund industry in the sense that there's rationalization of the tax or the double tax that was occurring on FOFs, both on international equities as well as FOFs on domestic equities. And I would believe that the change of duty on gold and silver on one hand, and secondly, the fact that as long as you hold 35% of equity in a mutual fund portfolio, your holding period to claim long term capital gains has dropped from 3 years to 2 years, and it is consistent at 12.5%, which is exactly the same as equity products. I think bring a very valuable alternative to an investor who is grappling with what they would believe are market valuations that would require a rethink. So I think in all told, I would believe that the tax proposals are no cause for alarm. And I think the broader context of the budget would mean that investors who are long term in thinking will be very, very happy with what the budget today was announced to be.
Sure. All right. So now let's take a quick break, and then post that let's analyze and let's understand what has been done or introduced as far as NPS is concerned, and also child education is one of the most important financial goals for parents. Personal finance special post budget, and let's take our discussion forward. And Tarun, let me ask you. So NPS, there is something called as NPS Vatsalya. We'll be getting the details ahead now by the government in terms of notification and better deep detailing on how can one invest in it. But then it's more about parents and guardians investing for their kids in NPS, which is an additional feature or a benefit, and also in the new tax regime, the employer contribution goes from 10 to 14%. Now, when we look at NPS, it's one of the most favorite schemes heavily endorsed by the government as well, the PFRD as well. How are these decisions? And what can be done more? Can we also look at NPS, the employee benefit also getting a tax benefit in the new tax regime? How likely do you think this can happen, or what is your view on this particular benefit coming on the new tax regime?
Yeah, so Kavita, a very valid question. So, as we were kind of expecting from a social security perspective, what are the proposals or the changes that the government can kind of make? So, NPS is one area where there were sort of heavy recommendations from the industry also. So, one of the change, of course, as you called out, so the change is basically the employer's contribution towards NPS. So, when we compare it with the central government or the state government employees, so they are eligible for an employer's contribution of up to 14% of their salary. But when we compare it with other, say, private sector employees or employers, there this benefit was kind of standing at 10% of the salary. So there was sort of a disparity, I would call it, between the central government employees versus the private sector employees. So now that has been addressed. So, which means that if one is opting for the new tax regime, there that 14% employers contribution benefit will kind of be available, and that section is basically 80ccd2. So which means that under the new tax regime, this will be available. But for any employees who are still opting for the old tax regime, this benefit will not be available. And then when we look at the fine prints, the corresponding change has also been made in under section 36, which talks about the deduction to the employer if they are making that NPS contribution. So definitely it's a welcome move, because not all employees sort of prefer the provident fund, and some basically want their investments to be parked into more attractive, more flexible kind of investment choice. So NPS does provide it if you want to kind of park your funds into equity, or if you want to be if you're a conservative investor, you would want to have a balanced sort of fund. So that way NPS provides you that sort of flexibility, and it has been well addressed. Now coming to your second point about child sort of NPS. So there is a concept of NPS Vatsalya that has been called out by the finance minister in her budget speech. So this essentially means that if a parent or a guardian wishes to contribute towards NPS for their child, that can happen. But earlier, now when we see the current scheme of things, only an adult can kind of opt for a NPS contribution. So now this flexibility, of course, the final prints will be kind of announced by the government sooner. So that's how the guardian or parents can contribute towards the social security for their child. And one more point that this scheme calls out is, as the minor will turn major, then that NPS can be transferred in his or her name, and that's how this will be benefited. It is more like, say, Sukanya Samriddhi kind of a yojana for, say, a girl child. Similar to that, it's a social security regime, basically to take care of the pension requirements. Yeah.
Sure. Feroze, I want to focus with you on the youth skilling part and also the education part, where almost 10 lakhs for higher education domestic institution has been added in terms of benefit, and also almost, loans up to 7.5 lakh with a guarantee from a government promoted fund. This will also benefit almost 25,000 students every year. Talking about upskilling, or, talking about education loan, very important financial goals for parents. How can one actually implement all this in their financial portfolio strategies? How can one understand these schemes now, Feroze?
See, of course, from an understanding standpoint, a lot of fine print needs to be read. But I think principally what's happening is, I think the guarantee of the 7.5 lakh loan will definitely impact the interest rate. So I think India culturally has not been taking as much education loan as it has been globally. So this paradigm shift is ponding to be addressed over long periods of time. So if you look at higher education, people who couldn't fund it as parents, they funded themselves in India. But globally, even HNI children take a loan for their education purposes. So that's point one. Point two is the fact that if you are going to take education as an item, which is an important goal, the education inflation which we computed in especially higher education turned out to be 14.3% over the last 10 years itself. If you look at longer periods, the inflation in the education space, especially higher education, has hovered around 12 to 13%. So trying to make sure that this expense, which is going to be a surprise expense when your child becomes older, that those are longer periods, right? You start preparing sooner. So people are generally falling short from what they have actually planned for. When you look at personal finance objectives, people had planned for an education corpus of a certain amount, but the education which they were targeting has a reasonable gap. So I think I'm very excited that promoting loans will bridge that gap, which has been a surprise part of inflation over the last 10-15 years.
Anthony, let's also focus on your house view in terms of sectors or the preferred sectors now after the budget. Manufacturing, infra, any more sector that you would like to add to the list, and also the sectors where, because of no announcement, you're disappointed.
Yeah, thanks, Kavita. So I think infra cap goods power have been strategic plays that we've had in our portfolios for a while. And they are plays that we've felt that the pockets of overvaluation are increasing by the month, right? So that's on one hand. One of the things that we've been constructive about over the last 2 to 3 months, honestly, and I think the budget probably gives it a little more fill up, is the consumption side. We just think that with the amount of emphasis on manufacturing, job creation, etc., eventually it's going to lead to higher incomes. Eventually, it's going to lead to consumption, which is a lot more broad based. So I would clearly add consumption to it. In terms of, I wouldn't call it disappointing, but I would say pharmaceuticals, technology, banking, they are spaces where, frankly, we've not seen any announcements. But I think each of these sectors, from a valuation standpoint, there are enough number of companies that